Welcome back. Time to get a business update with Owen. Hello again, Owen. Starting with the markets, NEC leading a few bad earnings this morning.
Yeah, absolutely. A glut of them. It is earnings season, Claire. Take your pick, really. There's some very disappointing ones, really, from NEC. Perhaps the headline loss, really, this Thursday morning, announcing 10,000 jobs are to go from the Japanese electronics giant. That was after reporting an 86 billion yen loss for the last quarter. Very disappointing festive period, as it has been for many Japanese manufacturers, including Nintendo as well. Another loss for this company, similar, around 48 billion yen. That was after turning a similar amount in profit compared to the previous period. I've put H&M as well, the Swedish even, not Swiss, clothing retailer as well, again for the last quarter. Earnings down around 2%. That was broadly in line with expectations, but nevertheless, its share price has taken a little hit this morning.
And the markets are reflecting those poor earnings.
Well, they have been certainly on the Asian markets. The European markets had a little bit of a lift, perhaps, getting over the worst of that news. Let's give you those numbers. There you go. Most of them up around the 0.5% mark in Paris, London and Frankfurt. Much more choppy on Asian markets. Most of those were getting back to work after the Chinese Lunar New Year. You can see there the Hang Seng finishing the day around 1.5% up, but Japan turning negative in the afternoon session, probably fueled by that news about their NEC and those job losses, finishing their day around 0.33% down.
So some weaker numbers to start the European trading day. Let's now, though, cross to the World Economic Forum in Switzerland. One of our other business editor, Marcus Carlson, is there. Good morning, Marcus. Now, the big theme there is reinventing capitalism, but these European leaders, they can't just leave their debt crisis at the bottom of the mountain, can they?
Absolutely not, Claire. Good morning to you. And oh, and by the way, I caught you out there. I heard that you said Swiss clothing giant H&M. It is Swedish, just like myself. So just keep. I
was obviously thinking of you, Marcus, but it's good to see you.
It's good to see you too. Now, as you say, Claire, obviously the all eyes here in Davos, they're on the Eurozone debt crisis, and everyone's wondering whether or not the Eurozone will come in from the cold, just as we have done today. Today we're speaking to Nariman Baravesh. He's the chief economist over at IHS in the United States. Welcome to France 24.
Thank you very much.
Now, we heard from Angela Merkel, the German Chancellor, today, a typical trademark message there from Angela Merkel. She said that it's all about austerity and discipline within the Eurozone. Do you think then that Germany and the Eurozone, do they have the right recipe at this stage?
Well, I think they have the right recipe for preventing the next crisis, but they haven't really dealt with this crisis, and this crisis is still there, and we're right in the middle of it. So I think that's fine what they've done for the future, but they still have to deal with what's going on now, what's going to happen to Greece, how the banking system is going to be helped out further in Europe. So I don't think really they've dealt with the current crisis very effectively.
So we're definitely heading towards a recession here in the Eurozone?
I think we are definitely headed towards a recession. Our best guess is it'll be fairly mild, maybe 2 negative quarters, small negatives. So technically a recession, but still it's not a great picture. Even if it's 2 0 quarters or whatever, it's not going to be a good story.
And what does that mean for the entire global economy then?
Well, I think it certainly is part of the story behind why the global economy is slowing. But the good news is other parts of the world, the US, Asia, are not going into recession. So the global economy won't go into a recession, even though Europe is.
Now, we just heard from Federal Reserve Chairman Ben Bernanke that he and the Federal Reserve are ready. They're standing by to provide fresh stimulus if need be. What do you say to that?
Well, I think it's a good policy. They don't need it right now because it looks like the U.S. economy is doing better. But what they're saying is if this is just temporary sort of improvement, they stand ready to do more. And I think that's a very good policy to have. So I'm fully behind them in terms of what they're saying and what they're doing and what they've done.
What are the downside risks in the United States? Yes, we've heard a lot in the past, let's say, 2 months or so about all of the signals pointing upwards. Unemployment, for instance, is coming down. But are there downside risks as well at this stage?
I think the principal downside risk right now in the U.S. is, in fact, Europe. A Eurozone meltdown, if you will, could hurt the U.S. So this year, it's Euro. It's the euro and the eurozone. Next year, however, there's huge challenges in terms of U.S. fiscal policy. I think nobody expects anything to happen before the election, with the presidential elections, but after that, the U.S. will come under a lot of pressure to fix its budget deficit and its debt situation. And exactly how they do that will be a key factor in terms of going forward. And there's a lot of political uncertainty about exactly how that's done. So I think 2013 will be a test year, if you will, for the U.S. And I'm much more worried about 2013 than I am about 2012.
Now, you've been to previous World Economic Forums here in Davos. What do you say about the mood this year when you go around talking to people, chief executives and politicians and all of the high flyers?
I think the level of anxiety here is much greater than it was last year. Last year, there was sort of cautious optimism. This time, I don't see that. Obviously, worries about Asia, to some extent slowing. Obviously, the worries about the Eurozone. And so all of these are sort of weighing on a lot of CEOs' minds, politicians' minds.
So no one is sure of where we're actually heading.
That's right. Although there is an interesting dichotomy here. A lot of CEOs will say we're very worried about the macroeconomy, the outlook, but our company's doing well. So it's this funny sort of split. They're doing well, but obviously they're worried about the bigger picture.
All right, a little bit of a dichotomy there, as you say. And with that, I'm going to throw it back to you guys in the studio. Owen, Claire.
Many thanks indeed, Marcus. You can also, I should just mention, you learn a little bit of German as well. You always learn a bit of language with Marcus. Schuldenbremse, that's German for debt break. He tweeted that yesterday, so there you go. Not only a fluent Swedish speaker, but a pretty good German speaker as well. That's Marcus, at MarcusF24, if you fancy following him from Davos on Twitter. Marcus, many thanks indeed for that. Well, Portugal remained, or has been so far, off the debt radar in the whole Eurozone crisis, certainly in the past few months, with Greece dominating the headlines and talk about a potential default. And yet now, and many analysts are saying that Portugal is going to join Greece on that candidate list of Eurozone countries that could default. That was after borrowing costs hit record highs. There's real concern that the government now needs more financial help, despite saying it doesn't need any further intervention from the EU and the IMF. Here's Catherine Viette.
Teetering on the edge, Portugal slips into default territory with record high rates on its bonds. Many investors were forced to sell Portuguese debt after Standard & Poor's downgraded the country to junk, which is below investment grade. The only other country in the Eurozone to have a junk rating by all three agencies is Greece. This has stoked fears contagion from Greece's debt woes could cause Portugal to default. The prime ministers of Portugal and Spain have asked EU leaders to take steps at next week's summit to help shield them from a knock-on effect from Athens.
We support a rescue mechanism, the bigger the better. So it will act as a dissuading element for certain things that we've been going through lately.
The Portuguese Prime Minister has denied reports the government may need a second bailout.
I want to reaffirm that Portugal will not ask for a renegotiation of its bailout program. I said it in Parliament and repeat it again. We will not ask for more time or more money to execute the program.
Portugal accepted a €78 billion rescue package last year to stave off bankruptcy. The country has embarked on an ambitious 3-year program of austerity measures and economic reforms aimed at restoring investor confidence. But Portugal's painfully slow growth is undermining market support for the country.
Portugal should be able to get back into the bond markets next year, Claire, 2013. But of course, Greece said that back a couple of years ago when they were getting their first bailout. So I'd say all bets are off as to when exactly this country can raise money independently.
All right, thanks very much, Owen, for that look at the day's business news. That's it for now. All the latest headlines coming up in just a few minutes with Stuart. Don't go away.